Today we shall be developing ARMA model using EViews. ARMA, which stands for Autoaggressive Moving Average Model. So in EViews we are going to use especially modeling of the value of the euro-dollar exchange rate at the closing of the financial market. We have closing value, highest value, lowest value at the opening of the market. So we use in this tutorial the value at the closing of the market. So let us open our series. First thing to do modeling series using autoaggressive moving average is to look at unit group in our series. So look at unit group in the series. You just need to go on view, and then we can first of all look at graph. So go on view, graph, and look at the evolution of our series. The first step, as I told you, is to look at unit group in our series. So go on view, unit group test, click on unit group test. You can select augmented decay follower test, for example, at level. So we have intercept in our series, and then click on OK, so that you can see that our p-value of augmented decay follower test is 0.049, is less than 5%, meaning that at 5% level you can consider that our series at closing value of euro-dollar exchange rate is stationary. So we can look at other unit group tests like Philippe's Perron. Click on OK. So according to Philippe's Perron, our series is not stationary because the p-value is more than 5%. So you can also look, for example, at KPSS. So that according to KPSS, we have LM statistic, which is a critical value at 1, 5, and 10% level. As the test statistic is less than the critical value, you cannot object null hypothesis, meaning that our series is not stationary according to KPSS test. Only test that confirm the stationary of our series is the augmented decay follower test. So we consider that our series is stationary. So let us go to see the correlogram of our series. Correlogram, go on view, click on correlogram at level. So then click on OK. You can see that correlogram show a autocorrelation relationship in order 1, 2, 3, 4, 5. You can put autocorrelation term in our ARMA model till order 5. You can put closing value lab 1, 2, 3, 4, 5 in our series, and moving average we should only put one element of order 1 in our series. So the correlogram of our series is set, we can just estimate our series using the tab quick, then the equation. So when we are on tab, you can just put our series closing followed by the constant, the intercept. We have closing lab 1. You can also put closing till like 5, lab 5, as we saw in the correlogram. So lab closing, lab 3, closing lab 4, lab 5, and the moving average of order 1. And then we click on OK by least square. Least square is by default method of estimation. Then we click on OK, and we can see that our model is here. Almost all our variables are significant in our series. Closing lab 1, 5%, we cannot consider that 5% level according to our model. Previous days significantly influence the value of the day closing value. Lab 2 closing value is significant. Same thing for lab 4 closing values, as well as moving average 10. So let us look at the residual of our series. We should test for the normality of our series. Go on view, do a residual diagnostic normality test. So you can see that at 5% level, you can just accept the null hypothesis of normality, meaning that our series follow the normal distribution. That's good for the econometric modeling. So we can look also at heteroscedasticity of our series. So we can go on residual diagnostic and click on heteroscedasticity test, and you can choose a bridge pattern.fit test, and then click on OK. But you can see that null hypothesis of our test is heteroscedasticity. So we accept the null hypothesis of our test, meaning that our series is heteroscedastic. How to make a prevision of our series? To make a prevision of series, we need to first of all extend the range of our series. So we came up on our base and double click on the range and change end date. So the end date were previously April 24, 2020. So you can extend to May 1st, 2020, and then click on OK. Precise involving inserting file observation. Then click on yes to continue and apply as well for the correlogram. So our series has been extended. So if we go on the spreadsheet, you should see that there are 1, 2, 3, 4, 5 new values that has been extended to our series. So to make a prevision, as I told you, you just need to go on forecast and give the name of the forecast series. We should choose let dynamic forecast and forecast sample that at April the 25th. April the 25th, because previously our series were ended in April the 24th. Now we start forecasting at April the 25th, 2020 till May the 1st, 2020. So then we click on OK, and you can see that our series forecast has been made. You can select our two series closing and closing forecast, and then open as group. Double click and open as group. So we can go on view, plot the graph of our series. So the forecast is not visible. We should select our series beginning by the forecasting series. But then we double click and open as groups. Go on view, graph, and we can see the forecast series which is in blue and the series evolution in red. You can see that our model have been used in order to forecast that our series is going to go up in a few days. If you are a trader, you should buy dollar so that few days the value of the dollar should go up and reach a good level. So that's it for this tutorial. I hope it very well help you understand how to run ARMA model.